Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we'll take a look at will be the Australian US dollar today. There's the Australian dollar. I've got the weekly chart up. I think that's appropriate. We've just come to the end of the first month of the new year. We're still pretty close to the beginning of that new year, so we'll take a longer term look at things. There's your Aussie. A little bit of a dead cat bounce here. This guy's been pretty weak. Here, I'll drop down to a daily chart, and you can see there you are. I think that says it all. You just poked into a sell zone there. Essentially, any kind of formation, any kind of technical formation, double top, head and shoulder top, whatever you want to call it. We think that's a great area to set up longer term shorts in this guy. We think that says it all. Next market, dollar Swiss. There's the dollar Swiss on the daily. You know, we've been saying this all along. You got all the patterns up now. Very, very bullish chart. Trade of the decade down here. Investment of the decade now as it just keeps streaming higher. Here, we'll keep focusing on that weekly chart. Plenty of room on the upside in this guy. It just keeps coming and coming and coming. And, you know, we refer to this as the big breakout right there. That's why we said it's going to be the trade of the decade. And when you pop out to a monthly chart and you're like, wow, look at all that room up above. So big breakout in that guy, and we think there's nothing but upside in there. We think that's a fortune maker right there. That's a trade that they don't come along too often. Again, of the decade, right? We're serious about that. Whole lot of room on the upside. We think investors, traders can make a lot of money there. Make a big difference in your life so you catch a big move like that. Next market, dollar index. Here's the dollar index. Same story. You've got all the patterns bullish, all of them up. They continue to press upward there. We think it's going to be a big year for the dollar. Really, it's going to be a big year for the U.S. economy overall, particularly the retail economy. Retail makes up 70% of the U.S. economy. So when we say U.S. retail, we're referring to businesses, companies that they're not affected by interest rate differentials. They're in America. They serve the U.S. economy. So we think it's going to be a very, very good year for those. Look at all those patterns up. So we think, you know, plenty of room on the upside, similar to dollar Swiss here. You're in the midst of a big breakout and a lot of room on the upside. Pretty exciting stuff. Here's the euro currency. You can see you've been in a pretty tight range there, going back a couple of months now. We think you'll come out of that on the downside. Here, we'll drop down to daily. You can see a little bit more detail. You can see this resistance level we've been watching on. We've been kind of hyping that as an area to sell against it for sure, and that's been working out pretty well. So we think you're going to come out of that formation on the downside. Any kind of a rally here would be a heck of an opportunity to sell more, even if it's against your position, even if you set up shorts up above 109 even or so, and it comes back against you and starts to bleed you a little bit. Don't sweat it. You know, look at it as an opportunity to potentially set up shorts at a higher level. So we think you got to be short this guy. Not shy about selling more into a rally, and you have to keep your eye on the big picture. A lot of room on the downside. Let's go to a monthly here. Yeah, that says it all, huh? You took out that 120 level, and that really opened the door to 100 and probably 98, 85, 90 all the way down here. We think you'll reverse all of those gains that you made in the previous decade. So a lot of room on the downside in the euro, and that's another one. You know, that can change your life. That's a big trade that can really set you up. You learn your lessons properly. You come out of that with a big account. You can really have some success in trading and life, and that's what we're all about. Take a look at the U.S. stock market because we've been talking about that. You really need to see the higher time frame weekly chart. We came on, we started covering this guy because we pointed out, hey, you're in a long-term zone here. That's definitely an attractive area to start to accumulate stocks. There's the S&P 500 in. You got into that zone there, and you're seeing it coming out of there. We'll see what happens. You know, it may take some time. Generally, you see a good bump in the spring. We talked about that U.S. retail. The power of that is extremely powerful stuff. It makes up the majority of the U.S. economy. So good stuff there. My concern overall with this guy would be that overall you get a big dollar rally this year that we're anticipating that could weigh on U.S. nationals. A much stronger currency makes it tougher for the U.S. internationals to compete, though. But we'll have to see what happens. You can see that's a big range that you're in now. So a lot of time, it could take a long time for that guy to bottom out or eventually work its way down here where you potentially get a buy signal. So we'll have to see. The stock market's something else. It's really something where, though, I think, and we think at Trading University too, from a longer term perspective, from an investor's perspective, from a month to month, year to year perspective, that the stock market's a pretty good place to have your money. From a statistical standpoint, that's absolutely been the truth looking back 50 years or so. So we like the U.S. stock market overall. Right now, we're in the buy the dip camp too, and really, the lower it goes, the more we like it. We love that 1750 level there. Really nice area right in there to potentially start accumulating this guy. But really, anytime you get in that zone, it's not a bad time to start to pick those up, pick up shares down there. Gold market next. We think gold's going to slice through the 1,000 level, and you're going to see much lower prices here. You can see you're in a sell zone there. Let me drop down to a daily chart. It's a moderate zone there. We'd love for it to get up towards the top there, 1140. I think as I said before, I'm really not that interested in gold. I think you're getting some a little dead cat bounce in here, but that doesn't mean you can't make money at it. But what my focus would be that 1140 level. If you get up, you maybe even probe above 1140, knockout stops, and then you get a turnaround, you get a shift of momentum at 1140. I think you keep an eye on that on the downside. And that's going to prove a really nice trade that could turn into an investment and really pay dividends. Last market, we'll take a look at U.S. interest rates. 10-year Treasury yields benefiting from the weakness in the stock market. 10-year notes well bid. 10-year interest rate holding above 190. You're seeing lower yields in sympathy with the lower stock market. So Treasuries, U.S. Treasuries benefiting from U.S. stock weakness, money flowing into the Treasuries. That's reflected in lower interest rates here. We don't see that as a big concern. You can see, rates are pretty cheap here. If anything, that points to a continuation of low rates. Couple that with lower gas prices in the States, and again, it really sets everyone up for a happy spring. Back to retail and back to people buying homes or refinancing homes, or maybe refinancing homes to do landscaping work, etc. And that's a big bonus too. So we're not concerned with the lower rates here. If anything, that's going to turn out to be a plus for the U.S. economy. I think eventually, as things pick up steam in the U.S., you're going to see higher interest rates overall. So long term, I'd be banking on higher rates, not lower rates. Short term, however, lower rates, just as lower commodity prices, are definitely beneficial to U.S. consumers. Thank you so much. My name is Jay Norris. We teach people how to analyze markets and how to apply that to their trading and investing. Thank you so much, and we'll see you next week.